Yo, yo, yo. I'll be back in a second. Gonna go get some coffee. Cheers. Good morning. Sorry about that, peoples. I am back here. Do. Live streaming. Here. All right. Good morning. Let's call you L. Good morning, L. Oh, gosh, I need a haircut. I'm looking rough. But I guess that's what happens when you work from home and you don't, in theory, have a boss. You don't really have to shave as often or get haircuts until your wife tells you look ugly, you know? And then I get a haircut. Alrighty, let's see. Good morning. Hopefully you have a blessed day, L. Hopefully we all have a blessed day here and a good day. So since it's really just you, I know you were here yesterday, so we're just going to go right to the market for the moment. And so yeah, yesterday ended up performing kind of like we assumed, kind of slow, lame. It did end up having one kind of breakdown towards the end of the day, and then throughout the after hour session we had a long move, and that long move has now been reset back to the 50 SMA, so it's going to put us back at where we were at yesterday. So not that the trading day is going to play out the same as yesterday, but we're still in the phase of the decision making game. So, and the reason I say that is because the market is priced. Let me just double check. I'll double check both platforms here, but we should be priced pretty much at the 50 SMA. So today isn't a day like we're looking for reversal long bounces. It's not a day where the market was in a buy move and it's really overbought. We may be looking for pullback and reset trades. Today's a day where the market is priced exactly at the 50 SMA, once again, just like it was yesterday. So we're in the decision game. We're having to decide if, when, how we're going to move this market. Yesterday, I mean, we bounced it a bit. We broke it down a little bit in the afternoon, and then throughout the after hour session, we took the market up long, and then we pulled it back to the 50 SMA. So as I get on stream this morning, and it's 8 in the morning here, we still have time till the open, but currently the price is like right at the 50 SMA. Let me just double check my other platform just to make sure the pricing is accurate. Let's see, 683.96. So I'm already getting discrepancies. It looks like close, but not quite. Well, let's just see. 683. No, they're about right. Oh no, there actually are. They're exactly right today. So like today's a day where TradingView and Thinkorswim's SMAs are both the exact same price. That's not always the case, but it tells me that the 683.98 price is accurate for sure. So that being said, this is our over under. We're right on the over under. So again, it's the same thing as yesterday, right? I don't want to go too much into the coaching and the teaching like I do every day because I feel like it ends up becoming kind of somewhat long and drawn out. And then I feel like I end up like teaching the basics of the strategy every single time. So like I said, like one day I'll get that guide made up hopefully in the next couple weeks. But I always seem to go slow with things. It seems. Yeah, I guess that could log out if it wants to, and I should probably bring up YouTube here. All right. Excuse me. So right now the market is essentially at support, right? Because we're not really below, all right? So we're in the phase of the decision-making day again. So what's that mean? In the short term, we can be looking for support right here because it's right at the 50 SMA. Until, for whatever reason, we truly believe the market has broken down. Kind of like yesterday when I took a small short on the market, it was right here when I said I think the market has broken down, at which point we broke down, had a back test, and the market moved away. So I'm not really looking to be bearish for 50 SMA breakdowns until maybe I see something like that, right? Right now, what are we doing? We're doing something like this. See what you're seeing right now, this is similar to what we saw yesterday here when the market was doing that, right? That's kind of where we're at right now in formation. Now, there's a couple things we can do. We can look to take the market long from here back to the top-down volume-weighted average price from this morning if it hasn't already happened. I haven't even checked this yet, but let's see. So we're looking to take the market up to about here right now. That's pretty much it. So right now, the long destination for the market would be probably about 684.59. And I'm not saying that it's guaranteed to do that. It's just retracing the volume-weighted average price of the pre-market trading is something we quite often do on a day-to-day basis in some fashion or another. Sometimes sooner, sometimes later, yada, 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 bottom line. So, anyways, that's about that. Now, as we get to right about where we're at, 684.58, this is where we might, it's debatable, but if we're really meant to have sort of a bearish day, a lot of times we would look and see that resistance gets hit right there. So now we're going to go dial in on a 1 minute, right? So this is where I would say, and it's not always perfect, but this is what we would say now is that the counter trend long to the 30-minute trend or 30-minute VWAP is complete. This is where many times we might see a little bit of a resistance and then keeps the trend going like that. So this is what I call like the 30-minute VWAP over under, if you will. So we just retraced it. 1 second, I'm just going to add it back for the moment. So 1 second, we're going to add it back. And when I say resistance, right, this is, so now we're kind of talking about two different strategies in one, right? So what we're doing is we're running into the volume weighted average price of the 30-minute trend that's been taking place, right? And the way I basically read it is, you know, unless they hold resistance here, then the market would, you know, arguably continue bouncing a bit in a simple world. Otherwise, this becomes a potential top tick 30-minute resistance point at which we would look to then take the market back down and then target to the 50 SMA again. And the reason I say back to the 50 SMA is simply just because the market is priced right at the 50 SMA, and when it is, a lot of times algorithms just like to basically move markets back and forth towards those 50 SMA locations. So, yeah, like I said, I can't, my brain always does this, right? I get on stream and then I start teaching. It's like I can't not teach. I don't know how to not. But anyway, so, and then I'm always like, well, so that's that, right? You know, like, so that's what it, you know, it's funny because it's like you don't even know like half of these things are going to form up the way they do. You just get on the computer and you're just like, okay, like this is just what it is for the moment. This is kind of what it is for the day. And it's like, but you really never have a clue that these things are going to kind of form up the way they do until you're sitting in front of the screen. You're like, okay, this is what's here. This is what we have. These are how things are set up. Like, this is just how the market is kind of set for the moment. I would have zero clue. I have no clue what it's going to look like tomorrow. I don't know what it's going to look like 30 minutes from now. Exactly. You know what I mean? You just kind of figure out where like key levels are at, and you know kind of how algorithms try to move markets a lot of times. And then from there, a lot of times the market kind of makes a little sense, I guess. But anyways, so the grand scheme for the day, like I need to figure out a better way to make our streams flow. You know, I need to have a better storyline for our streams. You know, somehow for everyone to just hopefully all be on the same page, because like right there is a 30-minute VWAP. Like that's two trade ideas in one, if you will, right? Where we can take a market long back to, in this case, the 30-minute VWAP, while simultaneously using that as a short entry down, right? It's like three now. And then at the same time, we can use that 50 SMA we're talking about as a targetable algorithm level after the 30-minute pullback, right? And so there's just no way that anybody could possibly come into our stream at any given moment and like really know what we're talking about, you know? So I have to find a way to sort of like outline all the different trade concepts and things that you will most likely see at any given point throughout the day, so that hopefully when you come in the stream and you kind of look at the chart, you can kind of be like, oh, like this is probably what we're working on at the moment, right? And so the other part, you know, that I'm thinking of right now is like, just because right here we're doing some 30-minute VWAP stuff, but that's only relevant when it's relevant. You know, in the back of my mind, I'm still thinking to myself, we're still on a decision day. We're just using what we have in front of us right now to kind of work the market a little bit, but ultimately, it's still going to come down to whether or not we hold the 50 SMA or we break it down, just like yesterday. Now, we said yesterday might be a slow, kind of dumb, boring day, and it kind of was. And it's going to be somewhat similar today in the sense we're on the decision-making day, and that's what we're going to be looking for. Does the market break down, or do we somehow hold support and not break down? Obviously, we're going to look at the volatility index to hopefully give us some extra edge there. We'll look at the VVIX to give us some extra edge there. We'll look at market internals to give us some extra edge there. But still, the market can always do whatever it wants, and right now it's priced at the 50 SMA, and we're undecided right now, clearly, if we're going to break the market down or break it out. Remember, this is pre-market trading, so I would just basically call this, you know, well, you guys know we have to get to the live trading hours, right? So just because we might be above the SMA right now, or we might be below it in 20, 30 minutes or whatever, until the market opens, the structure of the market, in my opinion, is still always up for debate, right? Meaning I don't let anything that happens in the pre-market necessarily dictate my bias for, you know, like the day, because I know that most of the volume that controls the market comes in when the market opens, all right? The volume that takes place throughout the after hours pre-market Asia session or whatever London sessions people watch, you know, just in general, right? It's just a heavier trading volume as we get into this live trading day, or into the actual trading hours of the day. Yeah, that might be a good thing, Al. Some more videos too. 1 second, actually. I need to, hold on, copy this thing. sure. I don't get it. I don't. Sometimes I just don't. All right. Excuse me. So yeah, that's kind of how we're using right now some 30-minute volume weighted average price stuff to pull the market back currently in the micro. But you can still see that the market is obviously priced over the 50 SMA. So, that's just kind of like for the moment a little top tick scalping short. But we know that unless the market's below the 50 SMA, we can't really expect the market to continue selling off, right? So this is down into the 50 SMA, bounce a bit, down below the 50 SMA. This is back to the 50 SMA. Holding, recover 50 SMA. Pop, squeeze, market back to 30-minute. All right, this would be your 30-minute VWAP. Not that you have to do that. It's just something that repeats pretty often anyways. And then this would be the 30-minute VWAP top tick resistance short. Sometimes it works better than others. Sometimes it doesn't work so great. Whatever. Anyways, that's your 30-minute top tick VWAP level, right? This would be the pullback at the 30-minute first tag VWAP, right? This would be basically a back test of the 50 SMA. Since we're not below it, we can still run the risk of coming up, right? If we start to get below, this is where arguably a sell-off may come to. So that's kind of how the market is, in theory, positioned based off some VWAP stuff and how the simple moving averages are currently set up in the market. Now, what was I just saying? Let me just redo that. Hold on. What price is right about there, so I can just do this. All right, and so the more simple way of saying this, as it always is for the most part, would just be if markets somehow get below, that would be bearish, and obviously above, then we maintain. So that's literally how you're watching the market in the most basic, simple form. Is literally just above, we're bullish, and below, we are bearish. So that's why for the moment, we are not short bias the market. We're not bearish the market, all right? What we just talked about is a 30-minute VWAP pullback kind of short scenario, right? Which occurred, but we're above the 50 SMA. So you see how we talked about it's only a pullback down towards the 50, and then arguably it's still supported, right? Because we're still in and slash above the 50 SMA here, okay? So as we get into this day, ultimately, that's what it comes down to, right? In the short term. And right now, we're just using some stuff in the pre-market to do all that, I guess you could say. All right, I'm going to bring down the volatility index as I haven't really looked too closely at the volatility index here. What's up, Connor? Hello, Semper. How are you? Yeah, I heard some things. I heard some news there with Brandon. And whatnot, so that's not good. Yeah, I've reached out, and so if you hear anything new, just let me know. Yeah, so I'm just kind of like, I'm hanging out here on standby. I'm gonna, I reached out and I said, if you need a hand with anything, let me know. And if if he needs me help running some streams or, just kind of keeping some other things going while, so I'm here. Oh yeah, don't we have data and a bunch of stuff coming out? Let me bring that up. Kind of forgot. Yeah, 8:30. Duh, kind of forgot. I was getting too lost in the sauce here this morning. Personal spending. PCE. Hold on, let me bring this back up. Yeah, so let's get right into. I don't like why. That does that. Maybe I should. Oh, I think I know why that does that. I think I finally figured that out. But either way, we're going to just move this out of the way for the second. All right, so we're going to jump into the VIX and VVIX here. If you want, you could, fib out the data that's coming out right now too. That's an option for you. But nonetheless, let's see what the volatility index is doing. Volatility index is currently positive. So right now, volatility is not on the downside. So there's still fear in the market, right? So that would mean, yeah. So anyways, fear is in the market, fear is elevated. That would mean you shouldn't be too long biased the market because fear is still elevated. So unless the VIX breaks down, market's not going to go into a huge long. Now the market's below the 50 SMA, so you have to be scalping and running things short as you're below the 50 SMA in the pre-market. So yeah, arguably I'm just hoping, we get to in the open and maybe we get a breakdown short today. Because again, you can see that the volatility index is up. And this is similar to what we talked about yesterday, which is just, again, you have the markets priced right at the 50, you have the volatility index priced right at its breakout level. If the VIX ends up continuing its run, then we'll see a short on the market, so on and so forth. Nice, huh? So, yeah, we'll bring up this, or wait, let's go back to, we'll go to trading view. It's always a little easier to work on when we do this. All right, so this is how fast we can flip. Well, now we're into, what do we have? What is this? I don't know, whatever data just came out. So let's see. There's a 1, so let's see, I'm gonna do a couple things here. It's the 8:30, right? Yeah, 1. I'm gonna go 5. Just gonna put some stuff on like that. And then we're gonna take a little bit of an anchor. We're gonna throw it on top of like a dad. Bang, bang, boom, cuckoo. So we've already hit, and this is the 5 minute, yeah. Okay. Yeah, so like right now we're below 50 SMA. So right now markets are on the sell side as it relates to SMA trend. And that's mainly due to the data that just came out, right? So you can see we've topped the market at the pre-market 30 minute into data. Now we're dumping it on data, and now we're tracking the volume weighted average price from the top of that move down, etc. And a simple way of thinking about it is that 9:45 PMI and Fed speak. Do you Eastern time? Yeah, you're probably talking Eastern time, I would only imagine so. Yeah, so pretty much what that means now is arguably we might be looking for like a little bit of a bounce back up somewhere like here, track down that VWAP. If the data that just came out is really bearish, then most oftentimes the market wouldn't push back up above the volume weighted average price and then keep going. But just in general, like I said, I'm not going to trust that anything's really breaking down just yet until we get into the live trading hours, something like that. So, but we'll see. Nonetheless, we're going to look for the volume weighted average price off the top of that market as a reset level, trend, continuation level on the 1 minute. What's Bitcoin doing? Anything good? Going down. Can't really be surprised. You guys know as well as I do that Bitcoin's not going to go into a bull market for at least a year plus. So all we're seeing is just basically selling down, oversold, short-term bouncing as the market's been going down. But yeah, you get the point. Oh, snap. All right, we've just retraced the golden pocket of data on the 5. So we'll see if we get some continuation here off the 61.8. If not, we should press back towards that volume weighted average price. But let's just make sure everyone's kind of aware. I know I draw a lot of stuff on the chart. I know what it looks like. I know some of you guys might not, but yeah, I guess if you're setting your charts up similar, you'll see it. But we are below the 50 SMA. So this right here is 50 SMA. This is going to be algo control level. Algo market maker. One more SMA market. We'll do that. I like that better. So that's the market maker level, and we're currently below that. So we could be looking to make the market down, right? That's generally the concept, right? Is we're below the 50 SMA now. We can go back long markets once we truly recover it. And when I say long markets, it's just as it relates to the system. If you don't understand the system, then you won't understand that in general, I guess. But yeah, so there you have it. I mean, it's pretty straightforward. We're supposed to be bearish below the 50 SMA right now. Like I said, it's still pre-market trading when I get through the live trading hours, and so on and so forth. Let's bring up the volatility index so that you guys can see this a little closer. If I zoom in and move this guy some. All right, so where's the 50 SMA with the VIX? The VIX 50 SMA is actually, I had it priced a little wrong here. So let's do this real quick. So right here, that's your 50 SMA. Bing, bang, boom, $20.28. And if we take this to a pre-market chart, you're going to see it right there. There's your 2028. So this morning, market dipped below. Market is now recovered. VIX breaks out. VIX pulls back. VIX holds support. VIX pops, right? So you can see how the market with data, right? So data came out at 8:30. We put the S&P 500 on its 30-minute volume weighted average price resistance point. We pulled the VIX back down to the 50 SMA over under support level right into data, right? So you see how the market just perfectly set itself up. And when we say perfectly set itself up, we mean like, this is how we kind of talk about like, there's really no coincidences in the market. Like, it's almost too perfectly designed, right? So you can basically see right when data is coming out, what did they do with the volatility index? We put the volatility index down to a price of $20.30, which is the 50 SMA, which is the market maker control point, right? So you can, it's clear as day. Look at, there's your 50 SMA break, recovery, break out, big candle, right? 8:30 comes around, they pull the VIX, they do, the market to the 50 SMA, which is the market maker control point, which dictates whether the market on the VIX wants to stay positive or if it wanted to break down and go negative. So you can see how we priced all markets very efficiently going into data this morning by putting the volatility index right on a breakdown level and right at its continuation level. So if data would come out negative like it did, it'd be a pullback, support, hold, VIX push, right? And if data came out, call it bad, or good, then VIX would have been perfectly timed at the breakdown. So very interesting how the market chose to set itself up today like that, I think. So the story's basically going to go. We will be more confident in putting equity and putting money back into markets on the long side in the S&P 500, in equities, for one, when the market goes into a buy signal, and two, when the volatility index starts to actually break down and go into a selling operation. So when fear starts to remove itself from the market, we'll be more optimistic at going long equity in long markets. Right now, we have a market has an elevated VIX into 20. So the market is fearful in terms of pricing on the VIX, and it's fearful in terms of it's positive on the market maker structure right now. So there's really no need for us to be too long biased in the moment based off of how all the readings are set up here this morning as I keep kind of going deeper into it, right? So yeah, that's pretty much that. We'll have to be, just slightly lean bearish now with the VIX holding support over the 50 SMA, right into data, etc. Now your market's below the 50, so we're basically looking to roll markets down until proven otherwise, okay? Okay. Yeah, I see what you're saying. Okay. Ooh. Okay, cool. I guess we're all caught up to speed. Everyone knows that it's basically just bearish below the 50 SMA for the time being. And yeah, all right, cool. How's Bitcoin doing? Bitcoin's going down some more. We're going to have to go get the weekly volume weighted average price, I believe. Be looking at. I still got to get the daily down here too, so. We got really close, so it's pretty much a hit. And if we, next would be the weekly, so. This is going to be, people are going to be mad when that one gets hit, but it's okay. All right, so yeah, pretty clear here, everyone. We're just hanging out on the downside for the moment. I wonder if I'm missing anything here. Well, anyways, I'm gonna start looking. I'm just gonna double check some of the biggest gainer stuff. I looked earlier. Like I said, when you have an elevated VIX and you don't have a positive trending market, it's not as easy to find things that are necessarily blowing up too much, but. Let's see. That's fine. Oh, what we're doing. How it usually is. All right. Anyways, yeah, sorry about that. I was just kind of, like I said, just looking through some stuff. Can't say there's anything too great, but that's usually how it goes. Actually, I want to do something different here. I need to max 6, 7, 2. All right, market just kind of continuing down here for a second. It's not really much. I mean, it's a candle or so, but yeah, market just doing what it do, staying bearish, I guess. Okay, I guess that is what it is. Yeah. The volatility index is it's still positive. Market is still below the 50 SMA. So generally speaking, that would mean we're not supposed to be long biased the market for swing long positive trend trading. So we're still going to be looking bearish in general. Yeah. But anyways, yeah, you guys know, like we said, we've gone over the phases of the market. So we have, we've gone from yesterday. Yesterday is the decision day, right? We're deciding at the 50 SMA. We chopped it up, chopped it down, broke it up last night, broke it back down to the 50 today, chopped it at the 50 again today, popped it up, released some data. Now we've broken it down. So nonetheless, we've been doing this whole decision day, right? So kind of in the phase of deciding. Now, next what's to come is going to be a breakdown or it'd be a breakout, right? So that's what we're just basically trying to figure out, is if we're going to swing the market down or break it out from the 50 and start that new buying or selling program. And that's, again, the way I see it. And there's a bajillion different strategies that people use and can use. And, arguably it's not even that, no strategy is the greatest, I guess you could say. But one thing's for certain, when you look back at the chart a million times over, the 50 SMA and the 30-minute open, high, low, close chart is in fact where the market maker slip structure of the market in the short term, right? And when I say the short term, every market maker flip in the short term leads to all of your bigger gains anyways, right? If you look at most swings in the market, I guess you could say, let me go to a daily chart here. Man, actually, I'm gonna delete some of this stuff real quick. For one, let's just all sit back and really just appreciate how great that market's been trading. Just such a fun market. That's good. But for example, right? Someone may look at a chart, right? When we talk about that 30-minute 50 SMA, like this move here in the market, this let me get my highlighter, right? This move, right? This breakdown, that started from the 30-minute, right? Like all of this rolling over, all kickstarts from the 30-minute, right? This rollover starts from the 30-minute, right? For the most part. Like even this bounce, most likely that bounce right about there, that was starting from the 30 minute. So again, you're looking in the short term 30 minute, as that's where market makers many times flip structure of markets. And the flippening that happens on the 30 minute ends up painting all of what appears to be your big moves on your daily charts and your weekly charts a lot of time. Maybe not the weekly. I mean, yes, the weekly too, but just in general, when hindsight, when you look back at a chart and like, oh, that was a pretty big pullback. It's like, yeah, and it started on the 30 minute. It always starts on the 30 minute. So that's why we're always looking at the 30 minute, right? Because we know that's where the flippening is going to happen, and that's how market makers are controlling many times. If you ask me, right? Can I prove it to a degree fully? No, but we just know, right? Because it doesn't take a rocket scientist when you look back at the chart on the specific time frame, right? If you ask me, it's clear as day, right? I mean, up, flag, up, under, break, down, back test, down, over, false breakout, back under, down, right? Long, short, false long. Market is confused. Maybe we get a breakdown, right? So yeah, that's why we're always focused on the 30 minute, right? It's because that's what's going to generally kickstart. That's where it kickstarts to these bigger moves, right? So that being said, this morning you should not be long biased the market. If you've been swing long, you got to be careful, because if the market decides to go through a true selling operation here, we're going to see the markets print lower. And then as a result, if that's correct, we should see a lot of the cycling of news today transition bearish. It's not, it's just what's going to happen, right? Do we know that the news is going to be bearish later today? No, because the market has to trade bearish in order to convince people that write news articles to start selling the idea of markets going down and this and that or the other, right? But we just know that at the 30 minute, that's where the markets can transition to more of a bearish market. And as a result, the news will follow bearish. And obviously today was what PCE number, like what's the economic data today, right? So the economic data is some GDP stuff, personal income spending, PCE, core PCE, S&P something, new home sales something, yada, 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 yada. So pretty much market goes down, they're going to tell you, oh, the home sales is something about the home sales, or PCE came in more than analysts expected, and now that's why the market's down. But it's not because of what Trump was saying last week that made the market go down, right? So every week, every day, it's going to be something new. Whatever the internet thinks should be sold to the public, and that's what it's going to be. But simply, it's just the trends of the markets changing. And if PCE is what's here today as the market is entering a bearish trend, then we're going to tell you it's because PCE was bad. That's it. All right. So that's another kind of thing that we tend to see is that the 30-minute time frame also becomes the control point for news cycles, in the sense that if you're over the 50 SMA, usually things have been going okay in the market. So the news cycle's been positive. And then as soon as we start to get below the 50 SMA, we're teetering on going into a breakdown in the market, and then things getting bearish. So if that does happen, we know that things that have been good are going to turn bad, and then the news cycle will follow. So not only is the 30-minute the market maker shift price for stocks, but it's also the shift point for news sentiment as well in the market. Yeah, I would agree with that. I would, there's like a 30-minute GP down here I see. Not that I can't, like, my brain doesn't, I like the GP system, like, love it the way Brandon teaches it too. And I've been using it a little bit more here. But more of just kind of like secondary thought almost. Kind of like this one here. I've been looking at, I looked at like this guy here. There was a big, I think it's the 30-minute, right? 30-minute no GP, like right there. That was something else I was looking at. But anyways, and now we have this one on the bottom. I think if you do this 30-minute GP here, this one went all the way to the 423, topped out, and now we're kind of rolling back down in under the 261. So if this fib cycle played out, you'd be looking down here, obviously at the retrace back to 161. So if in fact we did flip the 30-minute SMA bearish today, and we do get a sell operation to kickstart today into tomorrow, then obviously 161 would be on deck based off that 30-minute Fibonacci cycle, right? But everything's always up for debate at the end of the day. Let's see, what else happened here? Did we get anything? Let's see, is this, I've been kind of liking the 30 minutes too. So like that cycle, this 30-minute GP would be done from the highs based off the 423 extension, unless you want to retrace and all that good jam. Like there's another one here, that one's completed, that's down to the 423. So I've been looking at those a little bit, I think some daily chart stuff shied its 61.8 level. So like if we looked at this, and I could be wrong because this is TradingView, I haven't looked at Thinkorswim today. Yeah, like this daily chart, GP really hasn't hit. Yesterday was a shy, so obviously that's something else I kind of been considering down. Actually, speaking of, let me go back to the SPX here. What else was I just saying? Yeah, I don't know what I was saying. Oh, duh. Yeah, I want to look at a weekly chart. That's what I was trying to do. That's where I was going with this. I wonder if we're doing some weekly VWAP stuff. I haven't really looked at this as of late. Let's see. What time is it? 8:58. We still got a little bit of time till the open. Oh yeah, anyone who is in the chat here that really doesn't know some of us, I guess you could say. So if you're newer, which may be like L, I think you might be new to the stream, as you said yesterday. Semper here is in the chat. We've been trading together for years and years and years and years. He's has some good skill when it comes to futures trading. But regardless of futures trading, it's really just understanding markets, right? Whether you're trading futures or it doesn't matter. Buying something, selling something, right? You have to have some degree of, some degree of knowledge, right, in the market. So nonetheless, Semper, can be a good resource too to talk to while you guys are hanging out, or if you're in the YouTube stream at times. What's going on from Bitcoin? Just chilling. All right, looks like the market is probably going to go for a 50 SMA test here. It's probably, like I said, remember what we said this morning, pretty early. You guys know it all comes down to getting through the pre-market session and into the open. Like right now, the market is obviously priced below 50, but going into the open, we'll see. We might get a back test of it and then down, but Good morning, Ed. Yeah, I'm just gonna call you the pup. Good morning, pup. Yeah, and that's another good thing. And I was actually just talking a little bit yesterday to some peoples, that the more I've actually, as of recently, tried to trade less, the more I'm actually starting to hit better trades too. So that's just kind of a thing. It's funny. It literally is sometimes less is more kind of thing. But yeah, sometimes more to sit here and don't even really try to click a button. Then it usually kind of you're like, oh, like that makes sense. I should probably buy that one. So sometimes, that's just kind of the way it goes. But yeah, less is more when it comes to trying, I guess. So hold on one second. I'm gonna use a poll for the first time ever. Well, not really, but you know what I mean. So this is mainly. Wait, that doesn't make sense. There you go. There's a poll. That poll is to see how much people are actually paying attention. If you want to answer the YouTube poll, feel free. You don't have to. But it's a nice way to engage and have fun. Yeah, I was gonna say I haven't really found. Again, I haven't bought any stock today. Haven't really done no penny stock, none of those. Like I said, it's been. Well, then again, like I said, I'm not really waking up super duper duper early when most of the buy algorithms go off anyway. So basically, by the time I really wake up when it comes to looking at some sort of one of those stocks, most of the buy algorithms have already happened. So it's just rare that you're going to be sitting in front of the computer and the perfect buy opportunity comes across your screen while you're looking at it. That one actually looks kind of solid. Let's see. That is actually kind of doing what it's supposed to be doing. Yeah, that would be true. Yeah, CDT. That one is just kind of starting. Let's see, where's the 30-minute? Yeah, it's breaking over the 30-minute and the 4-hour. That one's not bad. That arguably has some opportunity to it. Also looks like someone's actually got a pretty big bid out on that stock too. It keeps jumping up. Actually, I should look at. It's already broke out the 4-hour. So this is one where, and actually CDT is one where it's breaking out both the 30-minute and the 4-hour level, and those are both priced right at about the same price point. Generally speaking, when that's the case, they're even a little better. Because a lot of times, like we always say, when you break out the 30-minute, you go to the 4-hour. The 4-hour is used as a target of a 30-minute breakout many times. So when the 30-minute and the 4-hour both priced at the same spot, it's not like you're breaking out the 30-minute trying to target the 4-hour. They both just kind of are in the same spot. So that's something I do pay attention to are the 30-minute and the 4-hour SMA calculation at the exact same price when, something attempts to kind of break out there. But anyway, Steve, yep, there you go. That was a nice spot there, CDT. That's exactly what you're pretty much supposed to be looking for. And so like right now on CDT, algorithms, and I'll pull that up too here. I'll drop down trading or thinkorswim because it's a little better because I have it all set up across the 3 screens. But so CDT, right? So this is the basics of. This is the system, right? It's the same thing for the S&P 500 as it is penny stocks and as it is large cap and mid cap and to a degree. It's just a little, stocks are just a little bit more volatile than obviously the S&P 500, but anyways. Again, so same story, right? You have your 30-minute chart. All buy programs are going to start right about the 30-minute. So where's your 30-minute price point? The yellow line, right? Look at, I mean, it's clear as day, right? Here's your 30-minute regular trading hours, right at $1. It's $1.04, like, and something, right? So it's right there. Zoom in on a 1 minute, what happens, right? For whatever reason, the market pops up today on CDT, hits that trend, right? And then we break over and look at, there's all your volume, right? So again, the market sets off buy and sell programs, and it happens right about the 30-minute 50 SMA. So there is the break of the 30-minute. That's the uptrend algorithmic market maker programmed level. Then it's not like a bunch of retail all decided we're going to buy 680,000 shares of the stock right now, right here. That wasn't them, right? And now, here we go. And now it's getting some attention, and we're talking about it, and blah, 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 and yada, yada, yada. And that's how it goes, right? But we know that the uptrend for CDT this morning starts at $1.04. Therefore, we know that as long as CDT remains over $1.04, momentum and the breakout and the uptrend are all still intact, right? So this basically means that if CDT does not continue and it becomes a dud and it flops out, then it's going to target right back to that level, right? So the breakouts happen on CDT. If it keeps going, cool. If it doesn't, it goes right back to the yellow line, right? And that's the point, is because that's where the market makers control it. So if you can get your entry points as close as possible to where that breakout happens, then your risk becomes far more limited, because even if it becomes a shitty one and it falls all the way back out, your entry is exactly where the market's going to go anyways, right? So you're not really red, but it's very, very challenging to get entry super close to that. Yes, Steve, it's the... Oh, I'm in the way of the 1 minute. I'm sorry. Thank you. I wasn't even thinking about that. But yeah, so that's the 1 minute. Sorry. Where's my face on that? Yeah, my bad. Thank you for saying that. I just scrolled it over, but yeah, so that's it right there. I'll delete and kind of redo it for a second. All right. So why are we talking about CDT right now? Well, we're talking about because Steve the boy is the one that put us on it. I didn't see this one, but it just so happened to be popping up, right? Is it going to be the world's best trader? Probably not. Don't know. Don't care. Right? The point being is that making sure that your eyes are focused in the right spot. Now, I didn't even catch this one. It was all Steve this morning, right? It was Steve was the one who saw this and he put me on it, right? And so, again, it's simply just the market and how it's set up, right? So we can see that at $1.04, that's where the 30-minute 50 SMA is at on the regular trading hours chart. I also use the 4-hour 50 SMA on a pre-market chart. I like that one too. Now you'll see that today they're both positioned right at the same price point. Right? Many times when we break out the 30-minute 50 SMA, we will then target to the pre-market 4-hour 50 SMA. In this case, the 4-hour pre-market 50 SMA is priced basically the same as a 30-minute. So it's no longer used as a target price point. It's just used the same as the 50. It's a break point, right? So effectively what we've done is we have broken out some trends here on CDT, causing a breakout here of a total of 24% this morning. And so anyone buying CDT right now, if it doesn't continue, runs the risk of a 17 to 18% decline, right? Because that's just how the market works. Like, that's really it, right? So, but the reason we're talking about it is because Steve mentioned it. I kind of liked it in the sense that it's perfect in terms of what we look for. We look for the market to be breaking out with volume through those sorts of levels. And then hopefully we just so happen to pick a stock that the people that control the market and send off buy algorithms on want it to be a good player. If not, we don't control that. Like if you decide to start buying millions of shares, like you might make the thing move, right? But at the end of the day, you don't control it. You're just trying to ride the algorithm someone put on. And we don't know how long those are going to last. Sometimes they could be days, sometimes it could be minutes, right? But it's knowing where and why the market is triggering something is going to help you understand, just like I'm saying here, if it doesn't work, it drops 17%, okay? Back to that level, minimum, right? And then from there, it might decide, oh, do I want to stay in an uptrend? Do I not? Etc., right? So that's just how it works. In every single penny stock, and for that matter, like every single big stock, most of the time it's going to be the same thing, right? If I go to the biggest gainers list right now, one second, let's do this. So if I were to go to the biggest gainers list right now, it's all going to look very similar. MGRX, sorry. So like here, look at, ready? Here's another example. So this is actually this one was a good setup, but the setup was like last night after hours. So like unless you were watching it last night after hours, you missed the perfect buy point, right? So let's talk about this one. This is almost like identical because, ready? Watch. If you look over here, bottom left, where's the 50 SMA? That is priced at 38 cents, okay? Where's the 4-hour SMA priced at here? The 4-hour SMA is priced all the way down here at the price of 38 cents, okay? So remember, all meaningful uptrends pretty much start at the 30-minute, okay? So unless you were watching this stock last night when the computer sent off a buy algorithm on it and just launched in 1 million shares, yeah, like some dude in his sweatpants, in his mom's or grandma's basement was like, yeah, you know what, MGRX, I'm just going to buy 1 million shares right when the market closes because this one's great. No. That's a buying program that was set off on this stock, okay? And where does it start? At the 30-minute. Also, do you notice that the 4 hours pretty much overlapping it? So you have a 30-minute uptrend start right as a 4-hour uptrend start. So it's like two uptrends starting right at the same spot, right? So it's a double end. So it's double strength, whatever you want to call it, right? Cluster of information lining up. So you basically have a 4-hour and a 30-minute uptrend starting because basically they're sending off a buy algorithm on it, right? So there's your buy algorithm start, and then there's your back test of the algorithm buy algorithm start. Flippening of the market maker structure right at 38 cents, okay? And then, what do you know? As a result, I'm probably covering that one up, sorry. And then as a result, what do you see? MLEC, look at it, so there you go. There's your buy algorithm starting on MGRX, and there's your back test, and there's your long. And now it's up 68%. Okay? This is the same strategy we use for the S&P 500. It's the same thing, right? If you go look at SPY, right? What did we just do, right? Let's delete some of this stuff real quick. So if you're looking at the SPY, what did we just do? Basically today / into tomorrow. Yesterday they chopped the 50 SMA, but if you're looking, right, on the 1 minute, here's the 1 minute. Right? The 50 SMA just broke down on the SPY. So this would be the market with data coming through the 50 SMA. So unless the market recovers, then we could be flipping the market maker structure down. So unless it's above, we're not long, right? And otherwise, this market is going to go into a downtrend, right? And we do still have the possibility of a back test, right? But bottom line, so think of the market right now, SPY as the same as MGRX, right? So we're going to say MGRX is the S&P 500 for a second, right? So look at MGRX, aka SPY, stock market broke out its 30-minute trend, it back tests, and now it's up 68%. So the S&P 500 today broke out, back tested, now it's up, right? All right, now let's go actually look at the SPY. SPY, what did it do? Okay, so it just broke down its SMA, and as long as it maintains below, it's down, right? So whether it goes for a counter back test or the market just drains out, it's currently in a sell move. Now remember, you don't control the market. So the sell move can last as long as it wants for those that control the market, right? So for those that control the market, if they want it to last for 3 days, it'll last for 3 days. If they want it to last for an hour, it will last for an hour. That's what you don't control. But one thing you do know is you know exactly where the start of those shifts happen, so that way you can at least somewhat to a degree be in line with those that are controlling the prices of markets. Okay. So that being said, yeah, the market is not bullish. The VIX is still positive. The trend is slightly bearish because it's just below trend. And we are not going to look to be long the stock market until the system says to do so, or until I say to do so. But that's only because the system's the one telling me to do so. So yeah, my bad if I was covering up that 1 minute chart there for a little bit, but yeah, there we go. So enough of the little teaching. We'll get back into watching the market here, but as you guys know, it's just bearish, right? The algorithms and the market makers have given up the trend so far this morning, right there. I know you might be like, well, what about this support? It's like, yeah, I mean, it could work, right? That's another thing, right? You've been taught, or many people have been taught, you look left for support, right? So think about this. Someone today is going to be like, oh, this is support, watch. And then they might try to buy it here, not knowing that the market is arguably starting a selling program here. So, right, selling program sells into what you think is support because you've been taught to look left at the chart and take previous bottoms, draw sideways, buy that. It can work. And that does work to a degree. But you and your buy point and whatever this is, if you think that's support, you have to think that buying here is better than the selling operation that could be starting, right? So is that what you want to do, right? And it's not that it doesn't work, right? There could be a beautiful long there for short-term trading, right? I'm just saying, like, you wouldn't want to be buying long this bottom and going swing long the market because you've been told to look left and horizontally, right? No. Yeah, there might be a little day trade, a little scalp here that maybe resets the market some, but it's you wouldn't want to be like buying huge there because a swing long, or the market could be starting a swing short today. Right? Think about that. Like, this could be a swing short start day, and you're buying long this dip because you don't know. And I didn't know for the longest time. No, I usually just stick with the 4-hour pre-market SMA. I have looked at the regular trading hours, 50 SMA at times. I just never really found value in it that I thought was meaningful. So, yeah, that's that. It's funny. Yeah, there's another one. So, like, I'm just going to bring this up real quick just because, that thing is super annoying. I wonder if I detach this one from that one and then I delete this one, if then I can bring this screen over to that. Yeah. All right. Anyways, here's another one. GFAI. I'm just emphasizing the point of. Ready? Watch. So look at where the market all of a sudden starts to explode on GFAI today. See all this volume coming in? It's just exploding. Ready? Watch, ready? Where's your 30-minute 50 SMA? Right there. Look at that. Look at it. Watch. Zoom in. Like, look at this. Again, this is why I always try it. It's undeniable. Look at this stock, GFAI, some random piece of poop, right? Random. 30-minute 50 SMA price point is at 43 cents, give or take. Ready? Where does all the volume in the buy algorithm get sent off on GFAI? Right at the 50 SMA, because that's the market maker structure point. You don't control markets. If they want them to go up, they'll make them go up. They will send off buy algorithms. The buy algorithms always start basically the same point, the 30-minute 50 SMA. In this instance, you not only have the 30-minute 50 SMA there, you have the 50 SMA on the 4-hour there. So it's like two uptrends starting at once. That's something I like to see. Doesn't always mean they perform great, but I've noticed some cool stuff using that. But anyways, so there you go. Look at. Oh, so do you think all of a sudden, just all of a sudden, a bunch of oh, that's a 5-minute too. Let me put it on a 1-minute. But yeah, so do you think all of a sudden at 8:30 in the morning, you know, a bunch of retail traders like, let's just start buying millions of shares of GFAI? It's a great idea. No, absolutely not. It's a buy algorithm. And where does it start? Same price it always starts. 30-minute 50 SMA, regular trading hours chart. Works on the S&P 500, works on large cap, works on small cap, etc. So that's how you can watch, you know, so if you ever wondered, like, how do you watch multiple stocks all at once, you just use the same exact system across all the stocks. And then you can know, well, that one's not in an uptrend, that one's started an uptrend, that one's back testing trend, etc. Right? So that's how I use that to basically just look at 20, 30, 40 different stocks all at once. Again, we're still bearish on the S&P 500. Why? Because the market is bearish. Not because price action is necessarily going down, but because price action is currently priced below the market maker bearish shift point. Lame. Do we expect, or can we expect, Adobe to go below $207? I have no idea. Let's see. Adobe. Wait, ADB. Well, for one, I can already tell it's in a selling program is the way it looks, but let's just double check. It is. What do you know? So again, watch. Ready? Ready? Watch. So let's just act like Adobe's a penny stock, like we were just talking about. Ready? Where's the 50 SMA? Again, when it comes to individual stocks, it's, again, like I said, it's not always perfect, but and that's because stocks can be a little volatile at times, right? They're just more volatile, if you will. So you can see we've had many times of interacting the 50 SMA here, and it didn't really do a whole lot of anything easy. But I mean, like, let's just go back some, right? Like, I mean, you can. Right, like, well, I'll just use the last example from the previous, right? So, like, here's your breakdown of the 50 SMA, right? It's right there, right? Give or take, like, right in this area. There's your 30-minute 50 SMA break. And let's go look at a pre-market chart, extended hours, and there it is, right? So look at right there. Do you look at during the regular trading hours yesterday, the market, and look at the pricing of the market, right? It's like it's up, right there. Where I'm circling, that's your 50, that's your algorithm market maker break change. 50 SMA change down. Throughout the pre-market and after hours session, they bounce it to the 50 SMA to back test. They use a back test during the pre-market trading hours at hours that nobody's using, 4 in the morning. They give you the perfect back test. So the perfect entry short for Adobe was during when everyone's nappy pooing, because the market is controlled, not by you. So you got the perfect breakdown and back test while you're sleeping and whack. And now you wake up and you see Adobe is down big today. And you're like, what is going on? And then you go look at the news and they're like, this, that, the other. Adobe, right? Tanja, no, get out of here. And then you wake up, you're like, my Adobe, no, right? And that's because it's going into a sell move. So that one's fun. Yeah, I didn't mean for that. I don't even know how that happened. I don't even know how Tanja crept on our page there. Nah, but she's nice. I mean, I got nothing against her, but yeah, we can't be stealing my screen space, bro, without advertising dollars. Sometimes I love myself a little too much. But what was the question? I'm sorry. Realistically, you asked me if Adobe was going to go below 207. Can we expect Adobe to go to 207? Sorry, sometimes I get a little off track and I'm just, giggling and laughing. So you want to know if Adobe can go below $207. Let's see. Well, it's in a weekly downtrend, so for one thing, you're not going to have a really big, long-term, meaningful uptrend, price appreciation till minimum you recover long-term valuation trend. So that's some ways away. The monthly chart is bearish, so that's not good. So this thing is even now downtrending on its monthly scale. So it's just straight up in long-term downtrend. So it's going to need, obviously, quite some price appreciation to value this at longer term trends that are going up. But so $207. I mean, I would say it's more than possible. Let me double check some standard deviation things. So if you look at the standard deviation of Adobe on the yearly scale, in theory, right now we're at -1. We're just below -1. I mean, yeah, I'm just looking at standard deviation right now, and generally speaking, a lot of times stocks, it's hard to get stocks to trade to like -2s and -3s, but I guess it's possible. I'm not going to say it's not possible, but I guess the best thing to say here is, let me go on a regular trading hours chart. 1 second. Yeah. Yeah, I mean, it's definitely possible. I have no idea, realistically. But again, the way I look at things is, I go from the start of trend, right? And so right now it is, in fact, in a bearish trend. So you don't really want to be long bias the market. Or else you're doing an oversold bounce or like a counter trend trade or something like that. What am I doing? Why am I all goofed up here? All right, I think the market opened, or it's about to. Yeah, it just did. Oh, I'm on SPX, that's why. That makes sense. Okay, let's see. Do we get breakdown, or are we going to go for just some reversal long back to the SMA? Because that would be the most lame scenario. So I'm hoping we don't do that. I'm hoping we get a breakdown and we have a fun day. And I'm hoping we get a gap and go, or at least a pullback and go down to 161, 681. That would be fun. But you'd have to take out those lows. So yeah, if we can get, breakdown, gap and go, we could already be seeing down to 161s there off the overnight gap. That wouldn't be bad. Let's see what the market internals are doing. All right, so far we have a market that's not really doing a whole lot. That's okay. So far we kind of have a mixed open with some of the market internals. S&P issues moving down a little bit. NASDAQ move issues flat. Some of the Magnificent Seven issues flat, etc. So right now it's a pretty much a nada game. It's a nada, nada, nothing going to happen for a moment. Again, still holding previous lows. So obviously, if these previous lows get taken out, then we might be able to actually see a sell, right? It might just be a matter of taking out this low, and then we'll start to move. Otherwise, we're just doing the counter trend pop stuff for the moment. As we discussed, right, when we were talking about earlier, like, hey, we don't really use this as support. It can be a short-term counter push back, but we're not swing long. So that's currently what we're doing. We're just bouncing this previous low point, but it's still in a bearish structure, okay? Again, we're basically just pushing right back up into $683 and 683.60, 680.80, arguably up as high as the 50 SMA. So like we talked about, well, kind of like we talked about, if markets don't break down, right, because we're below the, well, we already broke down the 50 SMA in the pre-market, right? But as we discussed, it matters about getting into the live trading hours, right? Just because we broke down pre-market doesn't mean we won't back test for the live trading hours, right? So that's basically where the market's going. And then only if we get above will we consider the market actually flipped back to a bullish market. This is simply a counter trend push in what's currently a neutral to downsided market. All right. No, that coffee's pretty much empty. Oh wait, I might be getting a delivery today. Oh yeah, those floors that I was supposed to install, they were milled incorrectly. We started putting them down and there was milling issues, so then we had to return the floor and buy a new floor. So that's been fun. My dog is going crazy right now, so I wonder if someone's at the door or something. You said they're all at about 686, 687. I see. Okay. I'm gonna go look at that real quick. Oh yeah, so you're saying they're all priced above. Yeah, so basically that would be back tests all the way to 686, 687. So yeah, we would look for that. So like that's I love that you said that. That's great. That's exactly the way my brain thinks too, right? So it's like these are all areas we know the algorithms are priced at. 4-hour, daily, maybe the weekly, or is it weekly 10 there, whatever. But just in general, we'll just use the daily here because there's a daily 50 SMA up about like 686, 687, right? So we know that the daily is down, right? If we flip the 30-minute back to positive over the next day, a couple days or whatever, and we rally the market, so we go through a 30-minute short-term trend change long, move it back to the daily, right? So the daily is a target once the markets are for sure moving, trading into a 30-minute long. So the markets really just go through uptrends and downtrends. So if we can turn the 30-minute into a long trend, we then just go back to back test the daily, right? Because the daily is right. So those are kind of how I think about it. We just move through uptrends and downtrends on all sorts of time frames, and we're always fluctuating things on the 30-minute, more specifically, if you will. But that's a great idea, right? It's not a bad one by any means. Whoa, get back to my 30-minute there. I think I deleted my level, unfortunately. Regular trading hours, what was it? There it is. All right, so the market does not want to break down. We want to basically go back to the 30-minute 50 SMA. Sweet. So again, guys, that's how you can act. Like, you see what I'm talking about? How we wanted to see a breakdown today, right? And what did the market do? It goes back to the 50 SMA to back test, right? So that's why I always talk about, you use the 50 SMA. It's going to control, it's really just your control point, right? So this is first tag 50 SMA back test, if you will, since the pre-market breakdown. So basically we treat this like first tag. You always have to expect there might be some opposition, right? So you can see it's kind of hesitating there. That's because we're just now coming into that 50 SMA for the first time as the markets were below it. So there is the opportunity for it to still remain down, right? And keep the market downsided. Sorry, I'm doing a couple things here. So if we do have enough resistance off that high, we should pull the market back in the short term to that box, right? So if there's enough resistance here, we pull down to here. So the way we look at this is pull back to here. Or if we're just getting above, we might then start kind of pressuring more long. So that's how we would read that. As far as SMA trend and stuff like that. But anyways, you get the point. Right now, the market internals on the Magnificent 7 are doing well. Oh my gosh, computer. Interesting. All right, so you can kind of see how we've basically hit 50 SMA here, pulled it back down to pretty much that area. Not quite, but you get the point, right? So just simple stuff. Meta is actually looking relatively strong. It's broken over its 50 SMA today, kind of getting a little momentum. We'll see. Market's starting to get over that 50 SMA there, so got to be a little slight. I mean, you don't have to be cautious. I mean, it's just, we'll see. It just depends whether or not we're going to hold resistance here or what. All right, market slipping back over the 50 SMA. So we're going to just basically say markets are no longer totally bearish because we're clearing above that SMA. So as long as that's we again, it's market's been a little tricky lately, but you see how we're starting to see a lot of strength as we come up through that level. So that means markets are arguably trying to go into a little bit of a buy move now. Again, still, it's been a tricky market just because we've basically been chopping the 50 SMA for like a day and a half now. But we'll get it one of these days. Right now, the VIX is still above its 30-minute SMA. It hasn't broken down. So there's still some fear in the market just because the SPY's pushed over that level. So that's what I mean is the the S&P 500 has broken out that level, right? But the volatility index hasn't broken down. So generally speaking, if the market was truly going to go into a long bias buying operation, we would also like to see that the VIX is breaking down its trend, but it's not. So still a little skeptical in that regard. Which basically means I'm not in love with the long, right? Amazon's doing really well from it turning positive the other day, or other week, if you will. So Amazon's still positive. I mean, heck, that's kind of doing like a little bull flag kind of look and move. Yes, exactly. That's perfect, Bless. So you can kind of see the VIX is still elevated over its 50 SMA. I can't see the VVIX because I have it scrunched right now. The VVIX, people still have bets on. They're still hedging downside risk. So if the hedging gets taken off and if the VIX starts to break down, then maybe we see a little bit more love to the upside. But there's still some degree of uncertainty, even with this price getting over the 50 SMA there. Amazon pumping, doing very well there. Good old Amazon. So Amazon, Meta's trying to get positive, or Meta is positive. Sorry, I forgot what I said. Yeah, Meta is positive, arguably trying to get into a little bit of a long/swing long there. Again, it started breaking out at 642, so now up to 649. Remember, we talked about Meta a couple days back when it broke out in the 200s. It's now up to about 207, so the buying operation on Amazon is holding true. Yes, the past 2 days on the market have been very chop city. That being said, we here have kind of understood that, so I think we've done a good job in navigating that. But ultimately, yeah, it's been relatively choppy. VIX still pretty much just chilling, hanging out right about the 50 SMA. Still holding the 50 SMA. All right, S&P about to pull back down, maybe even to that 1 minute volume weighted average price slash back to 50 SMA. Tech's back to positive too. Okay. Yep. As we mentioned just a little bit ago too, it's like with the volatility index still being elevated, not truly broken down, get it, kind of gives you that uneasy feeling about the market there. All right, there's market on, there's SPY pulling back down below 50, down to volume weighted average prices of the low a day trend, which have yet to be tested. Pretty common thing we see. Again, really the main reason we're not like just looking to blow the market up long here again is because volatility indexes are still elevated. People that are hedging for downside risk have not removed their bets. So again, that means we're not just going to be looking to take the markets extremely long. As we mentioned, the market on the 50 SMA today started below, so either the market has to just basically go, or a lot of times we'll do what? Go back to back test. This was a break above, so some people stopped out, flipped it up long for a sec, but we do not have, so at the time of breaking the market up here, we are not breaking the volatility index down. So this breakout is not confirmed by volatility. People are still fearful and algorithms are still holding the volatility index positive. So fear is not being removed from the market as we flip the market positive here. So that's why basically I'm not suggesting we just straight up long the market, right? Even though we're over the 50, because we're not confirming that via VIX. And so there would be the pullback. Side note too, anytime you see me put a green box on my chart or just boxes like that, it generally means I'm kind of thinking markets can try to move to there in some fashion or another. So that right there, what you saw is just the pullback into the volume weighted average price of the low a day. So basically this is a tactic that we use, right? Anytime the market has a nice move like this, right? Everyone who bought long is all happy, all rosy. By pulling it down to here, effectively we would stop out anyone buying most of this move, right? A lot of times. So we don't even have to take the market back to the lows to piss off people, right? We just got to pull it back quite a bit to about there. And we know that anybody buying that, buying that, buying that, buying that, buying that, buying here, they're all pretty much stopped out, right? So that's kind of just a thought process that we go through, and we do see quite often, you know. Well, yeah, Bless, your thoughts are correct, right? You said, I really don't like that both the VVIX and the VIX are elevated, and the SPY isn't agreeing with this. Perfect. Example. See what you just said. That is picture perfect. That tells me you clearly are paying attention to the things that I've said over the past couple days, right? Or week or however long, right? You can it's obvious, right? You see the VIX, it's elevated. By in the 20s, but also we can see it's over the 50 SMA, right? Then the VIX goes positive, but the market went positive, but the VIX doesn't confirm it. So it's not that the long won't end up working at some point. It's not that the market can't go up. It's just there isn't that true confirmation yet. And now sometimes, the VIX may lag at times. It's not like the VIX is always a leading indicator. Sometimes it leads, sometimes it lags, etc. It looks like the S&P issues are moving really well. NASDAQ issues are moving really well there. Magnificent Seven just struggling a bit. Honestly, I hate to say it, but it kind of feels like we're gonna do another lame day. There's gonna be moves, but I don't think we're gonna get trend direction one way or the other for a certain day. Excuse me. So, that being said, probably won't be doing a whole lot there. But, oh shoot, I forgot to go to my biggest gainers at the open again, like that idiot. I was too focused on the market, but that's okay. Ooh. Could this be, or this is going to be a scam? We'll see. Could it be? Could it possibly be? Just hanging out. Just hanging out. Not a whole lot to say. Not a whole lot to do for the moment. Figures, little schemers. Again, really not a whole lot of funness happening with the BTG. What about you, my guy? Maybe. Yeah, really, really boring here. Wow. Talk about explosive. Well, market's starting to get over that 50 SMA again. Currently, the VIX is not broken down. So we're still just kind of, maybe waiting on the VIX to break down here. I don't really see it as an amazing long or anything like that on the market, that is. I'm just sitting, waiting, scanning, looking. Yeah, sorry guys, I'm just looking around other stocks, so yeah, sorry, this is, looks like the market's going up. Cool, yay! We just got the VIX to break down a little bit, so we're starting to see a little bit more of a boost from the market. Again, oh, hello, there's a boomer. Don't know what that is or why that happened. Was that some of the data that was coming out? Probably. Let's see. What, 945.10 new home sales. So is new home sales good? I don't know. I don't really care. Okay, market's going up. Yay, team, go! Everybody, go, go, go. So the market obviously is positive now, with it breaking over the 50 SMA at the price of 683 with new home sales. We're starting to see the volatility index break down. So now optimism's come back with the new home sales blowing up the market. So it would just appear that maybe they're using the new home sales data to move the market up, use that to break the VIX down, take fear out of the market for the time being, and then just blow the market up. So nice. Cool. Yeah, I was gonna say usually home sales is like a nothing, but as you can see, you don't control the market, we don't control the market, the theys do, and for whatever reason, they thought it would be a good idea to blow up the market on this, whatever this is. Yeah, so. Yeah, no, again, regardless, I don't, the move's blowing up. It can be whatever they want it to be. For me, it doesn't really, I mean, it matters, but again, when I look at that move, it's like, yeah, it went up, cool, great, but again, it's, whether it be consumer sentiment, new home sales, again, it doesn't really matter at the end of the day because as we said, and as we always say, the market is controlled at the 50 SMA. So if we go out and we look, ready? So like today, consumer sentiment comes out. Where was the market? Right at the 50 SMA, okay? And then we go to the 1 minute. I mean, you'll pretty much see, right? Look at, we moved the market to the 50 SMA, broke it out, chopped it, put it over, make the market positive, consumer sentiment, home sales, whatever, wham, up, right? And now, if you look at the VIX, right? Where is it? Oh, it's up here. Yeah, if you look at the VIX, you can see we broke the VIX down, right? So the VIX is 50 SMAs, 2034. So at the time of consumer sentiment or whatever, all this stuff coming out, volatility broke down 2034. So if volatility stays down, then the market will continue long. So basically, as long as the VIX does not recover $20.33, then we'll probably see the markets continue up in some fashion or another. So this is how we'll do this. We'll pretty much just draw this up like that, and then we're going to draw this down like that. And as long as the market does that, then the market's going to go up, right? So as long as the VIX just stays down below 2033, there's more optimism that the markets can stay long. The flip side of that is the VIX needs to backtest 2033. So with the VIX going for the backtest, then you see the market dump down, right? So that's your flip side, is the VIX has yet to confirm its breakdown. So as the VIX pulls back or goes back up to confirm its breakdown, you're seeing the market pull back, right? Because this whole breakout right now, theoretically, is unconfirmed, right? It's just consumer sentiment, home sales blowing the market up over the 50 SMA, breaking the VIX down, but no confirmation. So, as we said, you can see, look at, ready? I mean, it's not rocket science, guys. I mean, it kind of is, but you can see, ready? See how the VIX is going back to where we drew it to? It's happening faster than my drawing, but you can see right there goes VIX back to $20.30. Why? Because that's the algorithm level. So now the market's back to 2030. As a result, your S&P 500 is dumped down. Why? Because the VIX broke down, but it's not a confirmed breakout. So everyone buying this market up long is buying it with, in theory, still an unconfirmed VIX. It's just a VIX breaking down, market breaking up without true confirmation. So what you're seeing right now is the VIX back testing, right? So unless the VIX actually holds bearish here, you're going to see the S&P 500 sell all the way back down to that blue line, most likely. Yeah, again, guys, I don't really pay too much attention to news or like data in that regard. I mean, like I watch it, but if Trump tweeted something great, again, I don't really care. If new home sales came out good, awesome. If they came out bad, whatever. Again, the market is just going to be controlled around that 50 SMA. It's not that it's not important to pay attention to those things. It's just I don't really let them trump my thoughts of the market, right? Whatever the data comes in, whatever the news may be, it really doesn't matter at the end of the day, I mean, remember like back in like remember when President Trump first got elected, and remember how like they told you the world was going to end 1,000 times over and that tariffs were going to ruin your entire life and everything 1,000 times over, and then like really the world didn't end, and like tariffs didn't destroy our country, and like everything ended up pretty much being fine. And then President Biden became, the president, and then like everyone on the other side said the entire world was going to end, like everyone was going to just like it was all over. And now here we are, and President Trump's now the president again, and like everything arguably is still fine. The sun's still shining. Things cost more, which obviously because idiots run things, but but then you remember last week how it was like. It was something else. I forget what it was. Oh no, there was a couple months back. It was the yen carry trade. Remember, the yen carry trade was going to end everything, right? And like surely the yen carry trade, that's when the world was over. But then it wasn't. And now it's 2026, and I'm on a YouTube stream, and the market just pumped up for I have no clue what, and I don't care why, because it really doesn't matter. Because tomorrow there's going to be a news story that they try to tell you is the reason why something maybe doesn't matter. Okay. Unless you just like reading news, when it comes to the market, things are just going to be moved the way they want to be moved. If you try to read news and think that that's going to like make or break your trading, I really don't think it will. If anything, I think it might screw you up more than help you. So, ready, guys? Like, watch. Like, ready? Watch this. I predict if the market doesn't go below here, news will be positive going forward, right? Because the market is now positive. We're on positive trend, right? Market is now on the positive side of trend, right? So for as long as this lasts, that's that. So, if the market continues up for the remainder of the day, or at least a positive, and then say going into tomorrow, it goes up more. I don't know. Was it tariffs they talked about? Was it the new home sales? And they'll be like, new home sales puts optimism back into the market. Donald Trump's tariffs might actually be doing something good for the economy. Like you can just make this stuff up, and it's probably going to be right, By the way, Meta is now up to $653 from today's buying point of $641. So if you followed the system and you were smart enough to buy at $642 or so, which I wasn't because I wasn't watching it closely enough, you would have now made over $10 per share on your position. But don't follow the system. It doesn't work. So, let's see. I took a small long on the market on this dip as we're going up. Nothing crazy. I'm seeing that the VIX has done its back test now. It's got a little bit of resistance. So if we're lucky, the VIX breaks down and the market kind of continues into a long. The market's been really challenging the past couple days, weeks. I don't really expect a whole lot from this buy move. So if we get lucky, fingers crossed, turns into a nice buy move. Maybe it goes up remainder of the day, and maybe it goes up into tomorrow. I don't know. I don't make the rules. I literally just try to trade long bias over the 50 SMA and short bias under the 50 SMA when I think it maybe makes sense. I think maybe it kind of makes sense, so I'm just going to take some long. Fingers crossed, because again, the best strategy really is hope. Because remember, you don't control the market. Others do. So now all I can do is hope that other people in the market want it to go up. And if so, then I make money. That's all I can do. Also, we're going to throw some anchor VWAPs on the low of this move, because arguably if it doesn't just keep going up immediately, it's then probably going to pull back right to that box, as I said, on the screen. So that's going to be arguably one of the short-term pullback targets for the market. Not arguably, I mean, it just always is, so. Oh, man. Holy cow, why do people watch my YouTube streams and then click short? Stop doing that. You're gonna make me look bad. You're gonna make the FTC come knocking on my door. And just like that, the market pulls back to the volume weighted average price of the last 1 minute dip so that it can at least screw a bunch of people over that bought long, right? If the longs are lucky, myself included, a dip is held here and goes up. If a dip is not held here, then we're just going to probably go a little lower, etc. Well, yeah, so now we hope that there is a dip that gets held here and the market keeps going up. If so, that's cool. If not, it doesn't really matter. So that's how we would watch this, like that. It's above or below that now, because that's the 1 minute kind of volume control point, if you ask me, to a degree. So I'm not gonna keep these lines on there for too much now. It's a little messy. Oh, and also we broke out the 50 SMA here, so that's our 50 SMA trend. Also, I just want to emphasize that this blue line, that's the 50. It might have changed a little bit, but that's probably close enough. 50 SMA. If long fails, longs fail. Oh my gosh, I can't type fail. It goes back here. All right, bring it back up. That's no, I don't really. I really don't use the View app. I never look at volume weighted average price. I only look at, well, it's not entirely true, but no, actually, really, I don't. I never look at the View app. Honestly, I don't even have it on my screen anymore. I just use Anchor View apps. I should probably take that off, eh? Don't need those anymore. We already completed that pullback target as suggested, so that's done. So you see how I have a long position on, but I'm basically still telling you it can go down to these prices because that's just it, right? It's like, even though I'm long bias over this 50 SMA, I know that if it doesn't work, it's just going to do what? It's going to go back to the volume weighted average price of people that just bought, and it's going to go back down to the 50. And that's completely fine. Why? Because that's supposed to happen. Like, that's literally just how it works, you know? So right now we have the volatility index. It's currently below its SMA trend on the 30-minute. Oh my gosh, computer, would you just work sometimes? All you gotta do. Yeah, sorry. The VIX is below its SMA trend. Let me double check. But oh yeah, not that I forgot, but you know, we're also holding support at the 1 hour. So the VIX isn't quite ready to fully go into breakdown because we're holding the 1 hour support. Remember what we said, when you break down the 30-minute, you always look to take the VIX to the 1 hour. Same thing with the SPY. If you break, oh, did we just do that and I forgot? Oh man, I hope I didn't miss that. Might have. Yeah, we went a little over it, but that was because that was that data stuff. Okay. But yeah, anyways, the VIX just hit its 1 hour trend down at 1965, which is support. So while the VIX supports its trend, that pretty much means the VIX isn't going to go lower for the moment. Now we're top of the market, etc. There's the market pretty much going back down to your 50 SMA. So that's how we accurately predict where the market's going to go, even though I'm in a long, right? Because we just know that if my long fails, we're going to go back down to the 50 SMA. Pretty straightforward, easy peasy, right, guys? So, you know, that's how you can accurately forecast where the market's going to go in the opposite direction of your current trade and not be afraid of it because it's supposed to happen, right? So, job well done. Everyone cheers. Hopefully you took a little short there on that move. I pretty much just bought into this dip. Bought into this dip, sold a little bit, and now I am red. Whatever. Or actually, slightly green, but red on what I'm holding. So cool. Okay, now we're back at the decision game. So pretty much the market is still just not ready to break out. Market's not ready to break down. We're just playing the old swindle everyone back and forth for a couple days until the market's fully ready, but that's fine. But yeah, so do remember that the market is still positive in theory. Right now we're still above support, right? Market is still in an uptrend, believe it or not. It looks terrible, but it is. So, you know. Why specifically anchored? I just find far more success with that than by using the regular VWAP. I know there's plenty of trades around the VWAP. It's kind of one of those things that everyone watches the VWAP. I don't know. I don't care for it. Maybe I just suck at using it. I don't know. But yeah, I don't really use the VWAP. And the reason I specifically use anchor VWAPs, they tend to, in my opinion, work better in the sense that figuring out where price is probably going to go, because like a market can the market could go up all day and be really far. It could be priced above the volume weighted average price for the day. But if I track the VWAP of every single dip in the market, it then predicts where the future pullback and dip is going to be. So, if I could find, like this is a good example. It'll probably work right here. So let's just say in this example, which there will be other examples of this actually, but let's just say that in this case, the 50 SMA here was the VWAP for the day, right? So yeah, like maybe at some point, maybe if it breaks over your long, maybe you could do a pullback to it. I see people trade it like that all the time, whatever, right? But let's just say this is where the VWAP's at, okay? Well, arguably, I can figure out pretty much where all of these little dips are going to be in this uptrend to a degree by using VWAPs. And this I can already see is not going to work perfect here, but you'll get the point, right? So if I would just anchor the low of this, right? So by anchoring this low here, that pretty much tells me that the future pullback is probably going to be down somewhere into there before going up. And then I would take a VWAP and I would anchor to the low of this dip. And it would tell me that when this is going up, there's probably going to be a pullback at some point that comes down to about there. And then if it's going to continue, that's probably where it's going to continue at. So then I would just take a VWAP and anchor to this low and go, okay, at some point when this bullish move's done, it's going to pull back to here, arguably. And if it's going to continue, it needs to hold around there, arguably, etc. So I've been able to accurately predict where multiple pullbacks would be within that uptrend that's currently priced way over your VWAP for the day. Right? So it's just a situation where I just don't use VWAP. I don't really see that I need to. And then, if I wanted to and I see that the trend is breaking down, I can take this VWAP and I can change this from anchoring to the low and then I can anchor to the high and then I can take it and I can go like this. Now the market is starting to break down. So I would take kind of the top and I would take the start of the breakdown right here and I would pretty much go, okay, if the markets are breaking down, you can see it goes down, it takes out that low, that low, that low. So we're starting to change direction. If it's going to go down, it's going to lower high. Where is it going to lower high? Arguably into those VWAPs and then down. So by tracking market participation levels in the market with VWAPs, I can get an idea of how sometimes we'll paint the picture of the market or move the market. And that is irrelevant of just your regular intraday volume weighted average price. So that's one way you could use that. Okay, so we're going to be doing this. The rest of this trading day is probably going to be just straight whack, but that's fine. I don't really care. Well, maybe it's going to be whack. Maybe it's going to be good. I don't know. But just based off the way this thing's just chopping around, it just looks lame. But I'm hoping it just turns into a nice rally. Let me just get out of some of this smaller stuff. Yeah. But as as the story goes, guys, despite all of this, all of that, right? We always try to say, if you try to keep it simple, right? What is really going on today? Well, or going on, right? Past couple days, bearish, oversold bounce, flips trend. We try to take it long. Market's not ready. We reset the 50 SMA. We go through a day of entire chopping around the 50 SMA, trying to get direction. We come out today, there's some data, there's this, there's Trump, there's that. The market breaks the 50 SMA and now we're positive. Like, that's all that's happened. Literally, it's just we had a day of consolidation and then in today we broke over the 50 SMA and the markets and the algorithms are pumping it along. That's all that's happened. So we're just trend positive now. there's no point to being short, right? The market is currently positive. And when I say there's no point to being short, it means there's no point to being short the market because you think it's below the 50 SMA. The only reason you'd be short right now is because you think that this long is not legit and it's going to go back to the 50 SMA and or below the 50 SMA. And if you don't think that's going to happen, then you should be a long bias participant overall. Yeah. Good morning, Walter Magoo. The old Walter P has entered the building. All right, the volatility index has backtested the 30-minute once again and is now below the 1 hour. That's another good sign for the markets to hopefully continue going up skis. But then again, the markets can only do what they want. But just in general, right, if the markets are ever going to go into a decent long after the VIX has gone up for X amount of period of time, what you'll notice is every good long move in the market will always see the volatility index break down the 30-minute, then it will break down the 1 hour, and those trends obviously continue. If those two things don't happen, the long ends up not being as much fun, or it kind of stalls out, it's kind of lame, blah, 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 yada, 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 lil yachty. So Netflix started a little bit of a buy move today, just a little bit ago at the price of, I don't know what that was at. Let's see. Yeah, so Netflix had a little bit of a long there at like $77.20. I didn't take anything long on that. I did take a little bit of a move on Meta today. Again, guys, I may not announce everything I do. The objective is not for you to follow trades live and, basically do everything I do. It's really just here to basically teach you systems and things that I use to basically go in and out of the markets, how to accurately forecast where markets are going to move. Just because you can accurately forecast where a market's going to move many times doesn't mean it's going to be super duper easy to make money. You still have emotions to deal with. But again, ultimately, the stream is here for you to learn a bunch of different systems, really get an idea for how and why we move markets on a day-to-day basis, so that way you can wake up and feel confident that you don't have to go searching around on YouTube why bull flags do this, why head and shoulders do that, why is it that when I get into a trade it doesn't work, why is it that when I buy it then goes back down here, etc. The objective is to basically teach you how the market is here to screw you over every single day so that you don't get screwed over like I got bent over many, many times, right? So anyways, hope you guys are doing well. Hope you enjoy the stream, and I'm having a great day. I think I'm going to go get some more coffee. As you can tell, I can need it. I need to talk slower. Turn that off there. excuse me. Hello, everybody. Welcome back. Everybody, welcome home. Welcome home. Man, another good move there, huh? Oh, excuse me. Bring this back up to 1 minute. Oh, the market. Oh, that's right. That's a 50 SMA bounce. So that means the market is going to be pulling back to the 1 minute 50 SMA view up. And then it would be maybe a bit of a yeah, our dog's going crazy. As per usual. Do you have a strategy that's specific for using the anchor view? Yes, we do, which you're kind of seeing right now. Pretty much everything you just saw are specific ways to use the anchor view up strategy. One is using it on a 30-minute for buy and sell signals. One's using it on a 1 minute for basically buy and sell moves. Kind of like you see right now. We know that, I'm going to go to the SPX here. All right, so let's think about it. Where did the 50 SMA break up? Right there. So we go to a 1 minute, right? And one thing we basically do is we look for, well, like we see, right? So this is the breakout. Oh wait, sorry, I don't want to put a view up there. Yeah. So this is the break over the 50. Now they might have used some news or tariff, or I don't know what they did, but something happened, right? And I don't really care what it was, to be honest. But yeah, they broke it up and over. All right, so market is positive. Right, this is pulling back, it's still above trend, it's positive. This is pulling back, it's still above trend, it's positive, right? So we're positive over the 50 SMA right here, okay? Now, what we do is we look at 1 minute and 5 minute volume weighted average prices of the breakout of the 50, and in this case, the back test. So this is the back test, right? So everyone buying this back test of the 50 SMA, basically if they don't hold this yellow VWAP, they're pretty much, you could argue like, you know, well, it's not entirely true, but just think about it, right? Everyone buying this low had to pretty much buy the absolute low. If they're buying anything up here, they're all pretty much done. They're all out, right? So that's the volume weighted average price of the 50 SMA back test. So when we say like, you know, the market can do whatever it wants, you know, the market's positive, oh, it's back testing, and then it's bouncing, whatever, right? So what we would just say is that the market right now is positive. This is the day that it tried to shift over the 50 SMA. If it's legit in this exact moment, there's a good chance that, you know, we're going to hold the dip here and try to move higher. Anytime you get a good buy or a good sell signal over the 50 SMA, generally speaking, it's going to try to continue in the direction of its break. And at many times, it will follow stuff like this, a 1 minute volume weighted average price of its breakout or its back test, right? So this happened the other day. We had the market break down. Was it that day? I think it was that day. So what I'll show you is on like the same system, same approach, but on a sell-off day. I think it was this day. Whoa. So I'm gonna move this up to there. All right. So on that day, we're gonna go back to that day. All right, so I'm going to show you the same system, but on a breakdown day, right? And just show you the differences that you could see, right? Watch this. So, and that's the other thing too. It's dependent on the breakdown, and how does that work, right? So watch this. So this one breaks down, right? This is the 50 SMA. I'm going to anchor the VWAP to the breakdown. Well, hold on one second. Let's review this a little closer, just a little bit more. So This is the 50. And I don't care what the price of the market does right now. I got a position on long. If it goes down, I'm not going to lose a ton of money. I get it. So whatever. Whatever the market's doing right now, it's not a big deal to me. All right, so 50 SMA. Right there. All right. So we know on this day the market gapped up and was positive, right? So if the market breaks out the 50 SMA, it can only do basically two things: go up or down, right? So it has to keep going up, and if it fails along, it's going to do what? Go back to the 50 SMA. There it is, all right? And then it gets to decide, is it going to break down or is it going to hold? In this case, it breaks down, it back tests, has a trade away from it, right? Not enough to just keep going, right? But it back tests again, cannot get above, right? Ends up breaking down, right? So this would be your breakdown ultimately of the 50 SMA. So then it goes bearish, right? So now the market is into what we would say is a sell-off, all right? We anchor a VWAP to the breakdown spot of the 50 SMA, or in this case, right, this would be the back test, because if it broke down, then it wouldn't have back. So it's a breakdown and a back test, right? And you could call this a bear flag, whatever you want, right? And so you anchor a VWAP to this high, market goes down, right? Or wait, sorry, I gotta anchor it differently. It's to the high, low, high. All right, and I like to anchor like kind of the back test and like this candle here, because I know that that's like actually the candle that broke down. So I'd anchor like probably these two. And so we know that if the market breaks down the 50 SMA and it trades in the direction of the breakdown, at some point it's most likely going to back test this level, and then that level can be used as an entry to continue in the direction of the trend. It just so happens that it took all day long for the market to eventually come back and back test the volume weighted average price of the breakdown. Okay? What you're seeing today, so you see that, right? So we broke down the 50 SMA, we tracked VWAPs, the volume weighted average price of that new market selling program is here. That's the way I read it, at least. And so you just break down all day, and it takes you all day to then back test and then down again, right? So now let's look at what we're doing today. I'm gonna delete some of this stuff. We'll go to where we're at today. All right, so now this is where we're at today. We are here, okay? The market just broke out over the 50 SMA, all right. And this is what our breakout looks like. Up on whatever that was, slam down, chop up, slam down, chop up. So far we're getting anything but a break and a trend away. Right? We're doing breaks and back tests, and it's just not breaking and easy trending going, right? And what we just did is we just showed you the same approach that we would have used on that breakdown some weeks back, which is the market broke out. Oh, shoot, didn't want to do that. Yeah, there we go. Market broke out, and we'll just call this a back test, and it's pushing away. And so what are we doing? We're taking a VWAP, and we're anchoring the volume weighted average price of that bottom and of that back test. If the breakout is legit and it's going to keep going in the direction of that move in the immediate, one thing we know is that it should at least be holding the volume weighted average price of that back test and continuing. If it's not, just means we're not kind of in that easy flowing trending go, if you will. Now that's the 1 minute. We also watch the 5 minute. Let me change this to a 5 minute. I can almost guarantee right now we're holding the 5 minute. See, right there, we're holding the 5 minute, right? So I've just done this so many damn times that I could just tell you that was going to be the 5 minute VWAP. You see how the markets are holding perfectly on that 5 minute VWAP? It's not that it's always going to work that way, and it's not that it's always going to be perfect, you know, but this is just how markets tend to work time and time again. So that's why I can sit here in front of you and confidently say all the things I say, because I've done this so many years in a row, over and over and over and over. You do realize that there is only so many things the market can do. It goes up and it goes down. Just figure out levels that it's most likely to go up or go down to, see it happen enough times, and then you'll sit on a YouTube stream and go, hey guys, it's probably what the market's going to do. Right? So right now we're just basically working the 5 minute volume weighted average price of today's breakout, or well, back test / breakout of the 50 SMA at 685, whatever that price is, 6,857. But anyway, so I'm long the market right now. I don't know if this is going to turn into a phenomenal buy signal. I don't know how good it's going to work. It could be awesome. It could be terrible. Again, I have no idea. I just know that the current price of the market is over the 50 SMA, and I'm willing to put on a little bit of risk and see if the markets end up turning into a rally. There's things that I would like to see happen. We'd like to see the VIX break down, especially the 1 hour trend. That hasn't happened, but if it did, then I can almost guarantee. I shouldn't say that word. Someone was mad at me the other day. They told me they were listening until I said guarantee. So apparently they don't like guarantees in the market. They'd rather be left in the dark, right, and not know. So I shouldn't say that word. No, I'm kidding. But literally, if the 1 hour VIX breaks down, then the market's going to go up more. It's not rocket science. If the 1 hour VIX breaks down, that means volatility and fear would be decreasing, and optimism would go back into the market. It generally leads to the market going up. So is that going to happen? Have no clue. I just know 1 + 2 or 1 + 1 = 2, right? So since 1 + 1 = 2, yes, if the VIX breaks down the 1 hour, the market's probably going to go up. I just don't know if it's going to fully break down. Yeah, I could go look at momentum, and I could look at this, and I could look at that. And you could try to gain more edge and more of this and more of that, and but again, still, it doesn't matter because you don't control the market, right? I could look at an indicator and go, the momentum looks pretty bearish right now, and then 2 seconds later, I don't know, Donald Trump tweets some crazy stuff and the market flies up, right? So again, you got to have your system, and then you got to have a little bit of luck, and you got to have some hope, and then that's pretty much it. I know it's the exact opposite of what all the trading books say. They say don't rely on hope and don't rely on luck. Well, I can assure you, you kind of need a bit of both. I really should learn some of these ICT concepts. I haven't really tried to. I mean, I do. I know some of them, but I haven't learned all of them. But I feel like if I did learn them, then I would kind of know how all the ICT trader people are positioned. That's the way I would probably think I would use that. But I don't know. But see, I think the only reason I'd want to learn it is just so I can learn how a bunch of other people might position themselves to hopefully take advantage of it, honestly. I don't know, if I would, you know what I mean? That's where I would see the benefit, is just because I know there's just a big population group that uses that stuff. So I just know there's a lot of people trying to maybe do that. So I guess if I could better learn all of those things, and maybe what are the most common ways that they try to go with those approaches, then, just like I teach here, right? You guys know what I'm trying to do with the 50 SMA. We're trying to go long, right? If I'm trying to go long over, where the 50 SMA is at, you basically know how to stop me out, right? You would just take it back below the 50 SMA, right? So it's not like rocket science there either. So, and that's what trading is just basically a big game of screwing everyone over in the short term. And so I guess if you're the best at doing that, So, yeah. So far, market's not really. So this is what I was saying too with the VIX breaking down the 1 hour. So right now we got a little long on it, but that's not. Oh, it's up here. Yeah, sorry. So let me just enlarge this. So this is what we're talking about with the long on the market and the SPY, is that the VIX is still holding pretty much right about the 1 hour trend, right? So this is the same thing we kind of saw a couple days back, but yeah, I mean, this is going to have to break down for the market to truly want to keep pressing up, right? So that this is all the stages, right? We're going through the stages. I'll show you. Ready? Watch. We'll go through the stages together. When the 15-minute breaks down, well, it's actually the setup's a little different. That's interesting. We normally don't see that, but that's cool. But anyway, so just in general, the 30 minutes broken down. Ready? I'll show you, right? So you can see here, we started the breakdown in the VIX today at the 30 minute. So 30 minutes negative, right as about the 15-minute broke down, right? So once the 30-minute breaks down, we transition to the 1 hour. Now the market, has sold off down to the 1 hour trend, right? So when the 30-minute breaks down, we target the 1 hour. Now we're down to the 1 hour. Right now we're at the 1 hour. I know I've said that a billion times in a row. And just because it's slightly below, doesn't really truly mean it's broken down, right? So when we go back and we look at a 1 minute chart, you're going to see what? So now look at the chart. Now we go look at a 1 minute, right? You can kind of get an idea for the price action of the market, right? The market on the VIX opened up here, and instead of staying in an uptrend over the VIX, we the 30 minute, we pull it back to the 30 minute. 30 minute bounces, trying to hold support. Support, not strong enough. Support breaks down. So 30 minute chart breaks down. There's your 30 minute breakdown. 30 minute trades to 1 hour, slightly below. Then it basically bounces the 1 hour and goes for a back test of the 30 minute, which was the previous breakdown, right? 30 minute stays down, trades back to 1 hour. 1 hour bounce back to where? Back to 30 minute. 30 minute rejects, where to? Back to 1 hour. 1 hour actually breaks down a bit. Then back tests 1 hour, slightly above, now slightly back below, etc. So in general, if we can slide the VIX out below the 1 hour, we're effectively going to start decreasing volatility, and that should keep the markets going up. Look at that candle down. Are we getting a boomer? Oh, look at that. Look at that. The market's going up, guys. Now, I don't know if it lasts much longer than that, but you can see how it's just one big organism. The market is really just one big organism, right? And right here, with the VIX going below 1970, we just dropped the 1 hour trend. And now you get this candle up on the market. Now, is the candle going up on the market because the VIX is going down below that level? Yes and no. Is the market going up right now because someone's buying a shitload of Meta? Yeah. Is the market going up right now because Netflix entered a positive trend today? So liquidity is entering into Netflix. So Netflix's market cap is going up, and now the market cap of the stock market's going up? Yes. Is the market going up today because Amazon started a buy signal a couple days ago and now it's just continuing to rally face today? Yes. So all of these things matter, right? And so it's just one big organism, right? So what we saw a couple days ago, some big name tech stocks go positive. Their market caps are increasing. Now, today, the market cap of the stock market is increased too, right? So it's all reflection, right? So a lot of times we'll see, like we just saw over the past couple days, a couple big name stocks go positive. They put on market cap gains. You'll see the stock market start to rise, so much so that the stock market starts to go into its own buy signal today. And then we're like, but it's not quite ready, because why? Because the VIX needs to break down. So now you're starting to see the VIX start to go lower, break its level. That gives me and others optimism to kind of keep bidding up the market. And as a result, your markets go up. All right, so it's just one big game, right? You gotta figure out the game, right? So, and it's one big organism, right? It's not because the market made a bull flag, and it's not because the market made a bear flag, and it's not because pending home sales came out 10,000 homes worse than last month, right? Nah, come on. Trillions and trillions and trillions of dollars go through the markets, right? Just because 10,000 homes or whatever, were foreclosed on, it's not going to stop trillions of dollars of money and flowing and market movement and structure. That's not going to do it, guys. The amount of money that's been made on Meta today, the amount of money that's been made on Amazon over the past couple days is just disgusting. Easy. It's not necessarily me, I'm just saying in general, right? The people that are blowing up Meta and the people that are blowing up Amazon, they're making money hand over fist right now, right? And the people that are doing that, I don't know, I've never met them. Okay. What time is it? Oh, I gotta check my phone. I gotta check my email because I might have like I said, that flooring delivery coming. Okay, let's see. Email. So yeah, nice long move on the market today. Don't really see a need to be bearish for the moment. Well, I say, when I say need to be bearish, it's like, I'm talking, that's what I mean is it's hard to differentiate between when I'm talking about the system and sometimes I may be talking about a VWAP thing, but as it relates to the 50 SMA system, we are not bearish. We are bullish the market. That's why I started playing on a couple different long positions a little bit ago, and that's why we talked about being long, and that's why we're talking about the VIX breaking down the hourly, and if that happens, the market will go up more. So, as the markets went up a little bit there on this last push, I sold a little bit, and now I'm just kind of holding, and, if it keeps developing, then yeah, I'll just keep holding, and, the rest will be, held for a swing trade and into tomorrow, and then hopefully for 2 weeks, I don't know. Again, I don't control the market, so as long as the market's over the 50 SMA, we can be optimistic to hold long. Now, if you start buying the market now, then yeah, you do got some risk, right? If you wanted to be a market participant long the market today, your objective was to be, one second, let me change this. I don't know what I'm doing. There we go. All right, so it's like if you wanted to be a long bias trader day, then arguably the best buy point would have been the absolute low of day. Well, I didn't know that the market was going to absolutely bottom there at the low of day, then for sure go up to the 50 SMA, then break the 50 SMA, and then hold above the 50 SMA, and then turn into a buy signal all at the beginning of the day. It's just can't figure that one out. Now, yes, I could have bought it thinking it's just undervalued and it's probably going to go to the 50 SMA, and then maybe it could, but you just don't fully know those things, right? So if you didn't know just to buy the market and hold it at the low of day, then you might have used something like here, the 50 SMA system here at the price of 684. Well, if the market makers flip the control point of the stock market and we do in fact get over the algorithm level here, then maybe I'll start looking long, right? And that's pretty much that. So we can see markets flipped trend way early down here. We'll go to the 1 minute. All right, so where did the market flip positive? Right there and right there, okay? Positive, pull back, blow the market up, pull back to support, bounce it, right? So if you were getting long the market here around the 685, 688.50s, then your risk is, you have $3.50 of risk down, right? Remember, algorithms control the market, you don't. So that's why trying to involve yourself here is ideal, because if you involve yourself here and the market does not form into a swing long, the market does a false long trend breakout, then it goes where? Back to here, and you're going to get $3.50 of downside risk on your trade, and then it could still hold support and then continue. So you have $3.50 of drawdown potential and the trade would still be valid. But the worst part is that the same level that can maintain the uptrend is the same level that dictates the new downtrend start, right? So if you were to involve here and market goes all the way down and does not hold support, then you're at the start of a new breakdown potentially, all right? Simultaneously, that's also the benefit of the system, is that that uptrends and downtrends start at the same level. So therefore, if you can get entries at the ideal moment as close as possible, then your drawdowns can go all the way down. You could still not really lose any money and still have the potential for the market to stay in an uptrend, right? So that's the benefit, is that when you involve yourself really close to the transition level, your stop outs, you don't need to wait for the markets to necessarily go below specific lows or go below this. You're basically, your entry is your stop, right? So then your risk is super limited because your trend trading or your bias is all based off of trend, right? It's not based off of necessarily my stop goes on what I'm willing to risk versus what I'm willing to gain. That's not that you don't look at things like that. It's just I'm only bullish because the market is trend positive, right? And I'm bearish when it's trend negative. So if I'm trying to make money as things are going up, and the only reason I'm trying to make money as things are going up is because I think that the market has transitioned to positive, That means I don't think there's a way to make money on the long side if it transitions negative. So why would I be waiting to lose money down here if that's where the trend changes? I wouldn't. I would stop out and then maybe try to trade bearish, or just do nothing, just stop out and wait to see if maybe it bounces, or wait to see if maybe it does break down and then goes into a buy move tomorrow, right? So yes, and I'm not saying that that's how it works every time. I'm just saying that's the gist of it. And remember, as a retail trader, the likelihood that you get perfect entries following the system every single time at the 50 SMA perfectly is going to be very challenging. And the reason being is because, again, that's your, like, literally that was it right there. That was your long point, right? So you either had to buy when it first got there and that was red. You had to buy when it started breaking out, then you got pulled back on, and then you had to buy like right into here before it broke out, or you would have had to buy on that back test. So when you look back at the chart, we can see that this clearly wasn't the most ideal spot because it still struggled. We would see that clearly this was the most ideal. Oh, that's a fib. I don't want a fib. We'd see that this is the most ideal spot for the long, or this was the most ideal spot for that long, based off of that system, which only exists for 1, 2, like 7 minutes. So 7 minutes maybe out of this entire trading day is where the 2 ideal entry spots were at, based off of this specific system and trading approach. Now you can see why the market is so damn hard sometimes. Because so if you follow this system, you had 7 minutes of basically time to buy or pull the trigger for that specific low risk entry. And the reason that a lot of times, and so I always say it's like you're competing with algorithms, right? There's a lot of people, you're competing with algorithms, other traders, banks, trading firms, like 100%. Like what you're learning right now is more institutional driven systems, which really is simple moving averages. I know it sounds kind of stupid, but these are more like institutional driven ideas and levels that people watch. So that being said, we also do consider the 1 hour level on sorry, this is trying to load this. It's going slow. We do consider the 1 hour level on the market as, okay, sweet. Love it when TradingView just doesn't want to work. That's always good. Let's go to the 1 hour. All right. We also consider the 1 hour level kind of an institutional level. So you can also see here, we broke down the 1 hour a couple days back. We back tested it here. That's resistance down. We're now back to it and over. So that's beneficial too. But yeah, so. And when I say institutional level, I mean in the sense that, kind of like this, like ready, like watch. See how last time market breaks out here, goes up, right? And then it breaks down the 30-minute here, sells to the 1 hour. That is like that's the trade, guys. When you see markets are breaking down the 30-minute and going into a short, we almost always look to target the 1 hour every time. So like that's the setup, right? So when you're like, how far can a market go down some days? Like I'll show you, right? On this particular setup, let's find the 30-minute, or we're on the 30. Oh, I did that wrong. I thought this was the 1 hour. I must have flipped it back on accident. Let's do that. So I got to find this kind of particular scenario, and it happens all the time. There's one. We got to go back quite a bit for that one. So I'm going to do it on this one. I can see it. All right. Wait. I'm back here. All right. So like right here, for example, here's a good one. So you see back here, we break this 30-minute down on that day. All right. This ends up being the 1 hour down here. Watch. So I'm gonna put this here, and then we'll go back, and it should be like that. Well, where we also zoomed out. There we go. Is that how far? No, that doesn't make sense. Oh, there it is. All right. So let me do that. All right. This looks a little goofy, but if you can get the gist of it. So like right here, that's the 30-minute breakdown. It probably breaks down again sometime here. But once the 30-minute gives up, we just go down to the 1-hour trend next. In this case, the 1-hour trend does not hold, and then it back tests and then stays down more, right? So that's what I was talking about. It's like we normally just move from 30-minute to 1 hour. It's always 15-minute to 30, 30 to 1, et cetera, et cetera, et cetera. So that's kind of what you saw today too, right? You saw the 30-minute breakout way down here, right? So the 30-minute broke out down at 684, and as a result, market then gets positive, and it shoots all the way up to the 1 hour. Now we've broken the 1 hour, so the 1 hour is now positive, and that's another big bonus. We always want to see the 1 hour go positive too. So at this point, we're pretty much fully long biased the market. The 1 hour is positive, 30 minutes positive, VIX is below the 30-minute, the 1 hour is broken down. The only the risk now would be if the VIX or say if the VIX went for like a back test, right? So the only kind of risk we see here with the market at this point for the long one that I can, not the only one, but one of them that I can see would basically be does it need a back test, right? If we look at the 1 hour, it just broke down, right? So is the market going to need, more of a back test, right? So if we go, that's 5 minutes good, right? Does the market need a back test to that 1 hour? If it needs a back test, then obviously the market's going to stall out, go down, blah, 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 blah. So those are just kind of areas that we know the markets can trade to and from, back tests, so on and so forth. So that's something I'm considering. But yeah, so far the long's working out well. Amazon's doing great. Netflix went into a buy move today. Meta's just straight pumping face. Actually, Apple might be trying to get positive. AMD's actually just starting to get positive. I think I'm going to take a little long AMD. I'm a little late actually. It started getting long a little bit ago, but I don't really care. I'm going to take a nibble on that one, and then I'm going to put some orders out lower than where I just bought, because I pretty much just bought the high a day. So knowing my luck, it's probably going to go down first, then go up. That's how that normally works. So, you know. And yeah, as long as AMD stays over $202.43, we're fine. So I bought up at 204, so I got pretty much at least $2 of risk down for myself on AMD. And that's like another thing too we just talked about. Like if the market goes for its 1 hour back test on the VIX, then we're going to top the market, pull the market back down. As a result, AMD, that trade I just took, is going to be terrible for the moment, right? But I'm only really doing it because I like that it's getting positive. What time is it? 11? Yeah, probably going to call it a day there. It's Friday. I got other cool things to do, you know. So anyways, guys, cheers. Have a good day. It's been another fun day. I would say accurately predicting the stock market once again. So yeah, cheers. Have a good one, and we'll see you guys back Monday probably. Unless, do I have something going on Monday? Let's see. Wait, that can't be right. Monday. Wait, do they start Monday? They do start Monday. I may or may not be on Monday. I might have to meet some people at a property for a job we're doing. I'm not sure. I might just give them the lockbox code. Not sure yet. So that's up for debate, but I'll try to be online. So yeah, anyways, you guys have a great weekend. Have a great weekend, Semper, Walt, bless up, Corey, all of you guys, Steve, Sam, L, all the people that are still here. Cheers. Have a good one. Let's keep riding this long until the sunset. I don't have so much long that I'm going to be rich, but I have enough long that I'm comfortable and I'm making some money and I'm feeling happy, and I hope you guys have a great weekend. Cheers.